the pain in the agricultural space finally be coming to an end? Considering the weakness in all sorts of crop prices, that many seem like you know what? It's a crazy question to ask. But I bring it up because something odd is indeed happening in the stock market. Look at what's happening with AGCO. That's the world's third largest maker and distributor of agricultural equipment like tractors and combines. AGCO reported a week ago, and even though the company beat Wall Street's earnings estimates by a penny off a 79-cent basis, the quarter was widely viewed as a disappointment, in part because of lower than expected sales, and in part because management's commentary about 2016 felt pretty darn grim, even as they did reiterate the previous guidance. Now, AGCO got slammed in the news, falling 9% in a single session last Tuesday, but from $48 down to $44. But since then, the stock's been able to work its way higher. Plus, even after today's hideous market-wide sell-off, AGCO stock's actually up slightly for a year. I mean, that's kind of amazing. It's dramatically outperformed the S&P 500, which is down more than 9%. So does the stock's resiliency mean that most of the weak-handed shareholders have been washed out? The company's prospects could be brighter than we think? Let's take a closer look with Martin Rieschenhagen. He's the chairman and CEO of AGCO. Find out more about how his company's doing and where it is headed. Mr. Rieschenhagen, welcome back to Mad Money.
Good afternoon.
Sir, I have
back
to...
again.
Good to see you. I have to tell you, in your conference call, when I was reading it through, this is one of the only companies I follow where North America is not doing as well as Europe. Europe is really big for you. You even see a turn in France. I know it's off a small base, but can we presume that Europe is bottom with agriculture?
Well, not completely. We think our point of view today is that Europe might be down slightly, maybe 5%, something like that. But of course, much better than America or South America.
Well, how is that possible? I mean, I want to read you something from your conference call because it's very rare we hear about this. To be honest, this is about North America. I am not satisfied with the development. We talk about share gains in North America for many years, but I don't think that we're really very successful and that we saw a breakthrough. What is that? Who are you losing to?
Well, we have a big competitor here in America. In Europe, we are the number one. We are multi-brand companies. So we have Massey Ferguson, Fendt, Valtra, Challenger, 4 leading brands. And they're very well established and very traditional and have a long heritage in Europe. While here in the US, we compete with a big player who is very dominant. And that's a little bit more difficult. So we had to reorganize our distribution first, which we did. And now we have to invest a little bit more into advertising, training, all things in order to get there. The target was to double market share, but to be honest, it didn't happen because the first, what we had to do first, we had to make money here. And we did it in steps. So some years ago, we could become break even. And now, of course, we don't want to be to basically buy market share. We want to do it through technologies. All
right, that's important, Martin, because I'm looking. You've had a remarkable share decline because of how much money you've poured in. You're generating more cash with less shares, which is really rather amazing. Testament to how well you run the company is by you. But would you be, maybe you should take, say, $100 million and just go in and try to beat Deere at its own game?
Yeah, that's actually something we are trying to do right now. And we want to become more aggressive in certain markets. And I think this is also what our customers are expecting. So we have launched, or we are in the process of launching, a super advanced, high-tech conventional tractor. So those are the tractors with small wheels in front and the big wheels in the rear, with 500 horsepower, more compact than those big old-fashioned four-wheel drive articulated tractors you can see. And this will rock the industry, I'm sure.
All right, well, let's be sure about that, because John Deere is a pretty great company. You're telling me you're leapfrogging them in technology? Like, if I'm a farmer, I'm watching the show, I have to say, wait a second, maybe AGCO has really built a better mousetrap?
Yeah, actually, we will have the leading tractor here for the US, and that will actually lower soil compaction, lower fuel consumption, better residual value, so everything you want to have. The advanced drivetrain in the world.
Last question. At one point, you ponder in your conference call that most of these downturns last 2 years. We're now in year 3. I mean, that is highly unusual. Can you really expect that it can last the whole year, be this bad?
Well, that's what we basically announced, and this is why also Wall Street was disappointed. I hope that we see a recovery earlier, but we prepare ourselves in order to, let's say, do our homework, and we look into every corner of the company to find the cents and pennies to improve our earnings for 2016. So we came in certainly with a conservative guidance, but I hope that we can do slightly better.
All right, we're going to keep track of that American machine that you got against that company that is widely considered to be the Apple of farm equipment. But let's see. Martin Reichenhagen, Chairman, President, CEO of AGCO Corporation. Good luck to you, sir. Thank you for coming on this show.
Thank you.
All right, they used their cash to buy back stock. The stock is actually doing better than the average stock of the S&P. I don't know, if you think the ag sector is coming back, maybe the way to go is with AGCO. Martin Reichenhagen, Chairman, President, and CEO of AGCO Corporation. Kind of an interesting story. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.